Hello and welcome to the Energean Interim Results Analyst and Investor Presentation. Throughout the call, all participants will be in listen-only mode, and afterwards there'll be a question and answer session. Just to remind you, this conference call is being recorded. Today, I'm pleased to present Mathios Rigas, CEO, and Panos Benos, CFO. Please go ahead with your meeting.
Well, good morning, everyone. I'm Mathios Rigas, the CEO of Energean Oil and Gas. Welcome to our first half-year results. We are very pleased to be here after the successful IPO that we had in the beginning of 2018. I will kick off with operational and financial highlights will be covered by Panos Benos, our CFO. Then we'll cover what has happened and what we expect to happen in the very exciting areas of the East Med that we operate. Obviously, following the IPO, the $460 million that we raised back in March, and $1.3 billion of project financing that supported us to fund the big project in Israel, and the lump sum turnkey contract with Technip, we were able to take the final investment decision immediately after the IPO, as we had promised during our roadshow, and kicked off this very exciting project of developing the Karish and Tanin reserves. 2P reserves were also we converted our 2C resources, which we were using in our CPR, into 2P reserves, so 349 million barrels. And a very exciting development over the last couple of weeks when we announced another 7.5 TCF of prospective resources that we see close to the existing blocks that we have. We have committed to an additional well over and above the 3 development wells that we had in our development plan for Karish and Tanin, the Karish North well, which we're going to spud in the first quarter of 2018, and this is a very important well for us for a number of reasons that we will talk about later today. In terms of operational results in the first half, we drilled an extended reach well into Prinos North, which is a satellite field in Prinos, in our Prinos facilities, and this well has been doing exceptionally well, giving us more than 1,000 barrels a day of production, and that gave us confidence to slightly amend our development plan and include another extended reach well, which we have kicked off into the Epsilon field, and we will talk about that as well later today. Pleased also to report no environmental incidents and continuing our exceptional track record working with local communities both in Greece and the other places that we operate in Israel and Montenegro. In terms of what is happening in the remaining of the year, we reported that first steel is expected to be cut for our Karish project in Q4 of 2018. Date has been fixed now. It's the end of November, so we are 1 month ahead of schedule, and that signifies the progress that we're making on the project. That was the first milestone of our project. We are continuing the planning of the Karish North well and continuing to increase our production in Prinos with early production from the Epsilon extended reach well that I mentioned before. And on the Epsilon field, which is the big development for us in Greece, we have spudded the first well in the Epsilon field. It will be completed in the last quarter of the year, and we will spud the next well. It's part of a 3-well program that we have on the Epsilon field. On the exploration side, we are continuing our efforts with seismic operations in Western Greece with Repsol and Montenegro, and we are also delivering what we promised on to our investors, a dual listing of Energean on the Tel Aviv Stock Exchange, which is also going to happen in the next few weeks. So I'll hand over to Panos to talk a little bit about our results, and I'll come back.
So good morning, everyone. Just going through the financial results for the first half. The results underpin the good performance of Prinos. As you have seen, we're running 50% higher production rates than the same period last year. Production costs down to $19 per BOE. This obviously reflects the operating leverage of the Prinos as we keep the operating costs fixed and the more we produce, the less the operating cost per barrel. We expect actually those to go even below $19 to close $17 for the full year results. Revenue-wise, we have been a little bit unlucky reporting-wise. Substance-wise, very lucky because we sold most of our barrels of the first half in mid-July at record prices until that date. So we sold the cargo of 25 million only 15 days after the closing of those numbers. But the performance is well reflected in the EBITDA numbers that we have doubled, as well as in the net cash basis, where our position right now is net cash versus the net debt we had the same period last year. 2P reserves, Mathios mentioned, sevenfold increase in those reserves. For the rest of the year, we won't surprise you with any negative stuff. I think we will do much better than what we expected. Production-wise, we will be above 4,000 barrels a day. Production cost even further down than what we expected. We keep our cost base very low. The euro so far versus the dollar has behaved on our favor. We see the dollar much stronger. We are a euro-based company, OPEX-wise, in Prinos. G&A, 10 million for a FTSE 250 PLC. I think we have that very well under control so far. And our CapEx expected to be well within what we expected in the beginning of the year. Exploration CapEx of 10 million for the full year, and another 460 million going for our projects both in Prinos and Israel.
So let's talk a little bit about Israel and what we achieved in the first half of 2018. I remind you that we submitted our development plan to the Israeli government in August of 2017, and we got a record approval times. In 2 months, we had the project approved, following which we signed our EPCIC contract with Technip, which has fully commenced now, a contract that guarantees delivery of the whole infrastructure, FPSO, subsea, pipelines, by the first quarter of 2021. And we have signed a contract with Stena for what we have today, 4 firm wells, and we're holding options for 6 wells at probably the lowest prices that we have seen in the deep water drilling market. And these 6 options will become very valuable for us. We'll talk about what we plan to do with these options in a minute. Very important, obviously, in any deep water project involving gas. Marketing-wise, we signed 4.2 BCM a year for 16 years of gas contracts, securing $12 billion of revenue for Energean over the next 15 years. Financed the project with $1.3 billion underwritten by 4 banks. The loan has been syndicated fully now, and we are going to be drawing down funds from the loan in the near future. Equity raised, obviously, the $460 million and the FID that we took in March. So it has been a very busy first half, and I want to zoom in a little bit on our gas sales. As I mentioned earlier, 4.2 BCM sold to the leading power producers and industrial companies in Israel, and a market that is continuing to demand more gas. All our buyers are bidding for more power generation. Israel is gasifying its economy, increasing the use of gas, reducing the use of coal, and that is creating a very favorable environment for us to operate in. All our contracts have floor prices, average $4.1 per MMBTU, and take or pay provisions that give us the protection we want for the next 15 years, that our business is very well protected regardless of movement in oil prices or other developments in the region. Now, we took a decision when we decided to build the FPSO to increase the capacity to 8 BCM. So we have 4.2 BCM, which is already contracted. We have an option to Dalia, one of our buyers, for a project called OR for another 0.8 BCM, and we are confident that Dalia will exercise this option. So we have another 3.8 BCM remaining on the FPSO and the pipelines to fill up the system and generate a lot more cash flow, because this extra capacity doesn't require a single dollar of additional capex. And this will be extremely important in the developments that are coming up in Israel over the next few years. Now, we announced that in the blocks that we have today, Karish Tanin, but also in the 5 additional blocks that we won from the tenders of the Israeli government, we see a lot more gas. NSAI, our auditor, has signed off on 7.5 TCF of additional prospective recoverable resources sitting in the 7 blocks that we control in the offshore Israeli waters. 2.5 TCF of that sits in the Karish block, and this, I reminded you, is over and above the 2.4 TCF that we have proven in Karish and Tanin. This primarily is the D sands that haven't been penetrated before, and we will be drilling down to the D sands in our first well in Karish North. That will provide, we believe, additional upside. And in Karish North, which is the well that we are going to spud in the first quarter of 2019, a well that is extremely important for us because, as you can see, and I don't want to go into too much geological detail here, we have drilled, or Noble has drilled, on the back of amplitude anomalies like the one you see on the slide, the red color of Karish, and this has given 7 out of 7 successful wells in Israel. We're drilling on the back of same AVOs and amplitude anomalies, Karish North. It's a well that has an overall 70% probability of success, geological. The C sands have a significantly higher, it's up to 78%. So a lot of people would call this an appraisal well. We haven't drilled yet, so it's exploration/appraisal for us. But discovering 1.5, roughly 1.5 TCF here has 2 big effects on us. We either continue to sell gas and fill up the spare capacity of the FPSO that I showed you before, or we push back the Tanin development, which is an $800 million cost for us in 2023. In both cases, this well is expected to have a big NPV effect on our business. The Israeli market has grown at about 15% compounded annual growth rate over the last 10 years, and based on the government's expectation, this is the Adiri Committee. Udi Adiri is the Director General of the Ministry of Energy in Israel. They published a report where they expect gas demand to grow and reach 25 TCF over the next years. In the next decade, from the 10 BCM demand that we see in Israel today, expectations is that we will be in a market that consumes 18 BCM a year. We have secured 4.2, and we have another 3.8 to fill up our FPSO and sell to the market, a market that is continuing to grow. What is happening in Israel at the moment is the government is selling state-owned power plants. The first one is Alon Tavor. The tender is ongoing at the moment. The buyers or the potential bidders for this power plant will be free to choose from the market a new gas supplier, and we will be competing obviously with the other suppliers to win this business. The government is also closing coal-fired power plants by 2022 and replacing them with gas-fired power generation. Again, that generates additional demand for gas in the market. Incentivizing the use of CNG in the cities of Israel, and building a new gas distribution system. So it's a market that is growing. We have today a 40% market share. We intend to try to continue growing this market share and filling up the FPSO, which is our immediate goal. In terms of the wider region, export options, which are extremely important for us, because the 5 new blocks that we have are able to export gas. We're not limited to sell gas to Israel only. There's a big pipeline, the East Med gas pipeline, that is being discussed and supported by the government of Israel, the government of Greece, and the European Union. And a lot of discussion about exports of gas to Egypt through pipelines that exist or will be built. We are very comfortable with the 4.2 BCM that we have in our market. fully contracted. These are real contracts with take-or-pay provisions, not contracts that are theoretical and may happen sometime in the future. But if there are export options, we will obviously be looking to sell more gas to other markets. It's public knowledge. We have made a proposal to Cyprus to lay a pipeline and export gas to the island. Cyprus needs, I think, between half and 1 BCM a year. We are 200 kilometers away. The choice that we made to build the FPSO offshore 100 kilometers away has proven to be the right one for two reasons. First, we have avoided any conflicts with local communities, and we see what is happening recently with people that don't like to see platforms in front of their beaches. But also it creates a hub for us that allows us to commercialize the gas resources we have in the area. Coming back to the map that I showed before, all these prospects, without the use of the infrastructure that we have today, would not be commercial. Half a TCF or 1 TCF in 1,600 meters of water is not commercial. If you have the infrastructure, the cash flow margins from additional gas sales is fantastic for us. Coming back to Greece, the Prinos production has been growing quarter on quarter, as you can see, and we intend to continue with the wells we have drilled, and we are continuing to drill. I mentioned that we have swapped in our drilling sequence one of the Prinos wells that we had in the program with an extended reach well on the Epsilon structure. Epsilon is a new field, virgin pressures. We will avoid a lot of the problems, the operational problems that Prinos has had in the past. And we chose to drill this extended reach well because of two reasons. First of all, we want the early production. We see oil prices rising. Yesterday we were at 79 Brent, and we need to see production growing as fast as possible. But also, we are more confident drilling extended reach wells following the success of Prinos North. The result of this is obviously that we have a delay in production because an extended reach well takes a lot longer than a normal vertical well, and that's why we have narrowed our production guidance down to 4,000 to 4,250 barrels a day for 2018. The Epsilon project has commenced. We are already drilling the first vertical well. The jackup rig has been operating for the last few weeks. Construction of the platform is ongoing in Romania. We anticipate first oil from the Epsilon field in the fourth quarter of 2018, as planned and as announced earlier. Katakolo, the other project we have in Western Greece, it's a 10 million barrel recoverable reserve field with $100 million of NPV, according to NSAI, our auditor. It requires a $60 million capex and 2 wells to test the structure. We will be taking the final investment decision or a decision to farm out the project, as we've said, in 2019. It's a project that has a lot of value, but at the moment we're focusing the development team on Epsilon and Karish. And as you know, for us, being very disciplined, I remind you that we are big shareholders in this business. We are totally focused on delivering value from Karish Tanin. We don't want to divert our attention to projects that will not bring the results that we have promised to our investors. Western Greece and Montenegro, the exploration efforts have commenced. Repsol is shooting seismic. It's a challenging area up in the mountains in Western Greece. Montenegro, we are going to be shooting the 3D seismic campaign that we promised the government in towards the end of the year or beginning of 2019, depending on availability of seismic ships. ENI is commencing operations in October. They will shoot 3D, and they have a commitment to drill a well, a high-impact exploration effort from ENI. More than $100 million will be invested in Montenegro, and we are sitting very comfortably waiting for them to de-risk the play and then decide how we move forward there. So in terms of what to watch for in the next 18 months, on our main effort, which is to develop reserves, Karish Tanin on track for first gas in the first quarter of 2021. As I mentioned, we're cutting first steel end of November. Hull is expected to be completed a year from cutting first steel in 2019. then it will move to Israel, and topsides will move to Singapore, which is where topsides will be integrated by Sembcorp Marine, the subcontractor of Technip. 3 wells to be drilled in 2019, and the Karish North high impact well in the first quarter of 2019. In terms of production, as I mentioned, we are continuing our efforts to drill infill wells in Prinos, optimize production from the Prinos field, but the big jump will come from the Epsilon development, both from the ERD and the vertical wells we're drilling. Karish North, starting Q1 of 2019, we're targeting other structures also that we've mapped. We have the options from Stena, we have the infrastructure to develop these reserves, and we have a market to sell this gas in Israel. So it's a very exciting place to be. Over and above Israel, Greece, and Montenegro, we're looking at a number of M&A opportunities, but I repeat what I said before. Always very focused in the Med, and always capital discipline being a key driver for us to maintain shareholder value. All the deals we've done today, Prinos and the acquisition of Karish, have been done at fantastic rates for our shareholders, as proven by our valuation today and the prices that we pay to get those assets. These are the types of opportunities that we will be focusing on. So thank you very much for your attention. Happy to answer any questions. Robin.
Hi, it's Robin Howarth from Stifel. 2 questions, if I may. Just wondering if you could give us an update on what you see as the pipeline for new gas sales contracts. I imagine my expectation is that you have to find more gas with the well in 19 before you can do that. Would you expect to begin contracting relatively quickly? And kind of a follow-up to that, I suppose, is the power station that you talked about being available for tender. Does the timing of that process work with your with the drilling of that well?
Yeah, very good questions, both of them. The biggest problem we have at the moment is that we have all our buyers asking us to sign firm gas contracts and increase sales, but because of limitation of reserves, not because of limitation of capacity of the FPSO, we are not comfortable to sign reserves without drilling our first well. So we do see a lot of demand, and in terms of pipeline, all our clients, the big companies that produce electricity in Israel, have expressed an interest to look at the privatization of the power plants in Israel. And on your second question, whether the timing works, the government initially in Israel was contemplating running the tender with a requirement for the bidders to provide firm gas contracts. What ultimately came out of these tenders is a process that the buyers do not need to come up with a gas contract. So it's going to take at least, I would say, a year until this process is finalized. So we will have enough time to drill Karish North, potentially drill more wells and prove more resources from the D sands of Karish, and then we will be able to continue selling gas to anyone that wants to contract with us. In terms of our competition, obviously we have competed with the other providers of gas, and we have managed to gain a 40% market share before having the benefit of the additional capacity for no extra cost. So we are able to, I think, win a lot more contracts with the strategy that we followed.
Sorry, just one follow-up, which was, could you give an update on the secondary listing in Tel Aviv as well, please?
Yeah, we have advanced the process for the cross-listing. We expect that to be an event in October, towards the second half of October. We have finalized all the documentation and the bureaucracy around this cross-listing, and we will be informing you with a specific dates towards very beginning October or later this month. But it's going ahead, and we're committed, as we said during the IPO process, to do that cross-listing for the benefit of all shareholders.
Hi, morning. Mark Wilson from Jefferies. On that BCM per year, so the current development plan of 3 wells can get you to what production in BCM per year?
The 3 wells, we believe, can do up to 300 million scf a day. So each one. So, and these are high impact. These are the rates that the Tamar wells can produce. So we could fill up the FPSO with the 3 wells that we have on Karish. The issue is more the tail end and the reserves, not the deliverability or the capacity of the wells. And that's why we're focusing on the new blocks, the additional volumes that we see from prospective resources to be able to comfortably meet all obligations. We would not sign a contract without knowing that we can deliver the gas all the way throughout the contract.
And then you give the supply or demand in Israel. What is the additional supply coming on from the likes of Tamar and Leviathan? What's the picture of the overall gas supply?
Well, Tamar is already in production. So we know that they have been producing 10 BCM a year, and we have managed to take 4.2 BCM of firm contracts away. Leviathan is a project that is extremely important for Israel and for the region, and it's 20 TCF. And a project of this size has to find a big market, a big export market. And we all know that they've signed a contract in Egypt and a contract in Jordan. So they are targeting the big markets, which pay higher prices also than what we see in Israel. The export option to Greece and then on to Europe, the pipeline, is a very ambitious project. It's a very costly project. I think with the support of the European Union, support of Israel and the other countries involved, even a $6-7 billion project can be funded, but it's going to take time. So I do expect to see competition in Israel because we will see a lot more supply of gas. But for us, the incremental cost of tying back Karish North to the FPSO is $100 million. So for $100 million plus the well, we can, if we are successful, fill up the FPSO. It's going to be very difficult for anyone else to beat those economics. Gives us the flexibility we need or we want to be able to compete. And in fact, this is exactly what the Israeli government wanted. They wanted to create a competitive environment, healthy environment where we don't have monopolies and the best producer, the cheapest and more efficient operator wins the market share.
Colin Smith from Panmure Gordon, 2 from me as well, if I may. Could you talk a little bit about the peak flexibility that you need to offer in your contracts, the swing that's involved, and how that relates to the annualized figure that you've given us for production from the FPSO? And then, secondly, just to be clear, when you're essentially what it sounds like is you're not really yourselves driving to put a lot of effort into exports, but to target selling more into the Israeli market as that opens up. Obviously, European gas prices are in the process of going up quite a lot, and that looks like it's connected with the European carbon prices, plus the oil price impact on global LNG prices. So it looks as though, if you like, a clearing price may be something more that's sort of a $7 to $10 type level rather than a 7 minus. So I wonder if you could just talk about what you think the opportunity is to actually gain higher prices in Israel on future gas sales that you might have. Thank you.
On the first question, all our contracts have a 75% take or pay, and there are swing provisions based on the ACQs that we've signed. We have to go in a lot more detail, and I'm very happy to do that offline with you, contract by contract, because there are differences between the IPPs and those that are base load, those that are not. We have a refinery who operates 365 days a year, so that's continuous operation. So happy to give you the information there in more detail. Now, on the option of selling more gas at a higher price. I think you saw on the slides that we have been very aggressive, and deep water offshore prices like these, I think you won't see anywhere else in the world. We were very fortunate, lucky, or timed it right, to develop these assets at the right time in the oil and gas cycle. A year and a half ago, when we started looking at this project, and we took the investment decisions and started to talk to Technip and the yards and the drilling contractors, there was no business for anyone. So we got, when we went to Singapore to see the yard was empty. And when we talked to the drillers, the drilling contracts came at extremely low prices. So that gives us the ability to make a very healthy cash flow for our shareholders, even at those prices. Now, of course, if we have the ability to sell at 6, 7, or even higher prices, we will do that. But I've said it many times, also in Israel, we're not greedy. We're very happy to be a company that has a very stable cash flowing business, paying dividends to our shareholders from contracts that underpin the long-term cash flows, and cream from the top if we can tag along to big export routes. What we don't like is to get involved in endless discussions with governments, geopolitical issues, pipelines that cross many countries. If we find more gas in Egypt, will the Egyptians require more gas from Israel? What happens in Cyprus if the Turks don't allow them to drill another well? And all sorts of nice talks. But in terms of business and return to shareholders, the key for us is to secure contracts at healthy prices and generate cash flow and increase value for the shareholder. Yes, of course, if we can sell at 7, of course we'll sell at 7. But I prefer to secure contracts today because my expectation is there's going to be more gas that will be discovered in this region. So the winners are going to be those that control infrastructure and are able to secure commercial agreements. Otherwise, we end up in nice stranded gas fields and theories. Do you have any questions from people online?
Thank you. Ladies and gentlemen, if you wish to ask a question, please dial 01 on your telephone keypads now to enter the queue. Once your name is announced, you can ask your question. If you find your question is answered before it's your turn to speak, you can dial 02 to cancel. So once again, that's 01 to ask a question, or 02 if you need to cancel. There'll be a brief pause whilst we register these questions. We have one question in the queue so far. That's from Igor Kuzmin of Morgan Stanley. Please go ahead. Your line is open.
Good morning, gentlemen. I would like to just check on your hedging practices. Thank you very much for disclosing the information in regards to the second half of 2018. I was just wondering if you can maybe comment on whether you have extended the hedging into the first half of 2019, and if it's possible, maybe please do comment on the average realized price achieved. Thank you.
So, if I heard you correctly, about the hedging, no, we haven't extended the hedging into 2019. Obviously, with the new price environment of this week, we will evaluate our options. As we have said, we don't like to be capping our upside on the oil price. We use hedging as more of a risk management purpose, trying to match OPEX with some of the volumes at healthy prices. We will evaluate it. Usually, we don't extend more than 12 months. We're well within the 12 months if we were to hedge the first 6 months, but so far we haven't done so. In terms of the remaining hedging, for the rest of the year, we have only 300,000 barrels hedged at the price of $70.
Thank you. And just one more in regards to the expected epsilon production. Is it possible to maybe shed a light on the latest expectations in terms of the production trajectory for epsilon in terms of the upcoming months and quarters? Thanks.
Igor, I think the epsilon well will come on stream, the extended reach well, towards the end of the year. So I think we would like to talk about the numbers later and closer to starting production from epsilon.
Okay, understood. Thanks very much. That's it from me.
Thank you. Once again, if there are any further questions, please dial 01 on your telephone keypads now. And there seems to be no further questions on the phone, so I'll hand back to the room for closing comments.
Okay. Any further questions from the room?
Hi, I'm Brian from Citi. So obviously you just mentioned then that you can comment more on production from Epsilon later on in the year, but in terms of production going into 2019 for Prinos, I was wondering if you can comment on that and the targets that you have going forward, and also the sort of knock-on effects for production costs as well.
As I said earlier, we will be commenting and giving production guidance later. For us, the Prinos license, Prinos Epsilon and Prinos North is the total production of the company. So we will be giving production guidance later in the year. In terms of operating costs per barrel, as Panos said earlier, because we have a huge operating leverage in our facilities in Greece, we have the capacity to produce up to 28,000 barrels a day without adding any further capex or opex. So every barrel we add to the system reduces the cost per barrel, and we will be coming down to very low levels.
The absolute cost of production is not expected to increase. If anything, the first 6 months on a euro basis, we've seen even the actual numbers to be lower. And obviously on a per barrel basis, with the more production, the unit cost drops impressively. But we don't expect any increase even in the absolute number of the cost of production, even with Epsilon coming on stream.
Well, thank you very much for coming. And obviously Kate is available. Kate Sloan, our investor relations head, for any further information or questions that you may have. And we're always available to see you and meet you, and hope to see a lot of you in Israel in the upcoming roadshow. Thank you.